All right. What's up, guys? Hope you had a good week and a good month. Actually ends January. And as goes January, so goes the year. So I hope you guys had a good January. That's a little bright. There we go. And have a good year. Here's how we're going to start it off. I'm going to talk about the things and why I've set up the positions that I have going into this year. Spoiler, it is not going to be in AI. It's not going to be in tech. So if you're looking, and it's not going to be in crypto. If you're looking for those kind of things, you want to follow what everybody else is telling you is just going to go and be hot. Hence, everyone is saying that something is going to be this way. That is not the way that I like to trade and invest. I'm a contrarian. It's to a fault. Okay, when I see people babbling on Twitter, tweeting on Twitter, X, whatever, about how everything is gonna, everything they want is going to be the best thing. I just don't get into that kind of stuff. I want to look for setups that have a track record of succeeding based upon technical analysis, which is the things I like, which is spikes, price spikes. In other words, false breakouts when price moves in one direction and snaps back to the other. And also around levels of support and resistance based upon volume profile. And the stocks that I bought this week, and actually we'll talk about all the stocks that I bought in January. Some of them are still hanging just above that level, so they're not totally missed. And we'll talk about some of the other things too, as well as I got to do an update on my thoughts on Bitcoin. A lot of Bitcoin stuff has happened in the past couple of weeks. A lot of things that people I think perceive should be bullish, but it's what you don't hear in the news that I think is actually more interesting, or rather, what the news should do to the price, and it doesn't. Let me not bury the lead. Let's talk about that, get out of the way, and then we'll get into a more teaching discussion about the setups that I liked for these stocks. I'll go ahead and give you the rundown. LHX, Hershey's, do you like chocolate? NUE, I made a post about that. MMC was earlier in the month, and LRCX was at the end of last year and kind of come into this month as well. Talked about in the first couple of live streams. And of course, still short MicroStrategy. And I just put on a short this week on Tuesday on that update on NVIDIA. Oh no. Oh no. Oh no. Hey, it's just a trade. It's just a trade. I know a lot of people have gotten into it and they thought they're buying this dip. I got to say no. We'll talk a little bit more about that as well. Some news that came out this week on NVIDIA. Not saying it's going to affect the stock price immediately or really tangibly, but it has to do with DeepSeek, OpenAI thing. What was that funny on there? I'll pull that up here in just a second. But yeah, so here, let's start. So this week, a couple things happened in the Bitcoin space, which I have sworn off arguing with people about Bitcoin. That was my New Year's resolution for this year. I was not going to argue with people about Bitcoin after 2024. Argue with so many people about politics. Didn't want to do it anymore, and then I found myself continuing to argue about Bitcoin in Bitcoin maxi chats. I told myself I was testing my ideas against their notions, but I'm really speaking to people about their religion and what they have their entire financial future is based upon, and trying to convince them that they may need to be a little more cautious with their bullishness, that the cycle is starting to come to its end. I mean, everyone talks about the halvening cycles. They know that the halvening cycles happen. They think about them in the bullish sense, but if you go back all last year and 2023, they all would agree that at some point in 2025, the year we're in, that this cycle is going to top out. It may not be this month. It may not be next month. Some people are saying October. That's kind of optimistic, I think. But anyway, so I guess he's not my nemesis, but old Michael Saylor got featured on the cover of Forbes. Okay, and as you guys know, MicroStrategy is one of my picks. I think it's a great hedge against being long Bitcoin. A lot of people disagree. A lot of people want to be long Bitcoin and super long MicroStrategy. It's not even a double down. It's a highly leveraged play. But I think that if the cycle ends and Bitcoin goes down, the financial engineering, the alchemy, as Forbes says that he has been engaged in, is going to unwind pretty dramatically and quickly. Right now it's still holding at a support, but they just can't bring it off of it. It's a very key support. 50% retracement from the September 2024 to this all-time high just keeps getting held down and held up. Something's got to give, and that's going to come from the Bitcoin price. And just overall, oh, by the way, when somebody posts a picture on the cover of Forbes, I think it bears reminding them of another person that was featured on the cover of Forbes at a certain point in the Bitcoin cycle. Just saying. It's not necessarily bullish. Too few instances to call it the kiss of death, but yeah, we'll see. The other thing that I find interesting about it, hold on just a second. I wanted to try to do a stream. Let's go ahead and do that. I was trying to do this on Twitter as well. Let's see if it works. All right, so Twitter's working, just coming in. Forgot to turn that on. We'll see if people actually join on Twitter. Um, but on Bitcoin this week, so a couple of things. Now, there have been a lot of talks about the Bitcoin Strategic Reserve, aka the bailout for Bitcoin. That's what I call it. And Cynthia Loomis has been appointed by Trump to position as what is her position? Chat, do you know? Do you remember what that is? She has some sort of position in the administration as a uh, crypto policy chair of something like that. Okay. Well, this was on January 28th, which was Tuesday of this week. Was that Tuesday? Yeah, that was. About 1 p.m., she was on Fox Business, or she was doing an interview.
Why Bitcoin would make sense as part of our strategic reserves
Talked about
is that we recognize
reserve.
other long-term stores of value and put them in strategic reserve. We have a gold strategic reserve. We have an oil strategic reserve.
This is the person
I think it is fitting that Bitcoin, now that is really digital gold, be included among our reserve assets. So I'm proposing in the Bitcoin Act that we purchase roughly 200,000 Bitcoin a year just by converting money we all.
That is something that everyone has been looking to happen, isn't it? That's the news. You know, the whole Trump pump that happened when Trump won the election because he was going to be the crypto president happened with the promise that this was going to happen. And you would think once it becomes announced, you would see some kind of move in Bitcoin. But you didn't. You didn't see any real move on Tuesday of this week. The move happened. Let's clear up the chart right here. So that was about, let's say, noon or early morning on Tuesday of this week. Okay? Yeah, you had a little spike here, a little bit of volatility. There was a little small. This is basically what the announcement did. That's what the announcement did. Now, what followed was the FOMC. That's where all this takes place on Wednesday, the day after. And then, of course, today we've basically given up all the gains from FOMC. And so this whole strategic Bitcoin reserve, which everyone perceives as being so bullish, I mean, it's talked about, it's not approved, but just to get the details, get to see what they're planning, the market just did not respond bullishly. And there's a saying about bull and bear markets where if you're in a bear market, it totally discounts bullish news, and it really emphasizes bearish news. And the opposite is true. If you're in a bull market, it takes every bullish news and it just rips on it and ignores all the bearish news. It doesn't matter what news is, really, to me. I've not found it very useful at all in doing any kind of trading or analysis because you don't know the news before it happens. Otherwise, that'd be insider trading. And so I think that's very telling that we just didn't get a positive source from it. And, Bitcoin just can't get back above. You can't make a conclusive close above an all-time high. It's just spiking up against it and getting sold off. Who's selling all this Bitcoin, they ask on Twitter. I don't know. If you understand Bitcoin, as I'm told, there's limited supply. So, if Michael Saylor can drum up enough money, he can buy it all up and squeeze the market up. But we'll see. We'll see. I think the greatest reward is on the downside. I think the greatest reward is there's too many people. It's too crowded of a trade. And the cycle, I think people know they're starting to get fatigued. We'll see. I am talking my book, and I have been wrong before. We'll see. I just want to go for where there's asymmetric reward. And when you look at Bitcoin having gone up in this cycle as much as it has, I've talked about my bullish projections before. I actually was looking for about 145K this year. But as we get further into the year and not getting these big yeets that the market really wants to see, the people that are invested want to see, I begin adding more to my MicroStrategy short. And so we'll see. We'll see what happens in that. All right. Let's talk about the stocks and the setups. I want to get through there. And we're going to try to make sure this live stream gets in and out in 45 minutes because that seems to be what people like to see. And thanks for coming back and joining. Like I said, I want to take it easy to start the year And now I'm ready to talk about the plays going into the year. These are what I'm going to look for 2025. So the first one was actually brought up in a live stream by chat several weeks ago. This was in December, actually, and this is LRCX. LRCX, Lamb Research Company. I'm going to be honest with you guys. I do so much better trading stocks that I don't look at what the company even does. I just look at the price action around volume or manage risk, playing opportunities, and that's what I'm going to be focusing on this year. And by the way, as part of this, because this is one that the chat on my live stream found for me, and I ended up taking at the very beginning of the year. Maybe I think I took it maybe at the end of December, when it basically came back to 73.18 here. Let's see. No, it's right in here in like the last few days of December. So if you guys have symbols, put them in the chat. We will look at them here in just a second towards the end of the live stream. But let's go through some of these setups. So if you guys have watched my streams, listen to what I talk about. 50% retracements were my bread and butter before I discovered volume profile. You'll notice on my list right here, these are all things that I own, stocks from various points. Talked about them. I don't have even time to go back through my live stream, but here's one. RTX was a 50% retracement that happened October of 2023. Raytheon is a defense contractor. This was one of those instances where the technicals matched the events, and actually even after October 7th of 2023 and what happened over in the Middle East, we were able to get into that at 73.36. Coca-Cola is another great example of 50%. That's from back in 2023. But I looked at this. This is something that I've had for a long time. You can use this all the way. This Amazon I called the trade of the century. Very simple. 50% pullback here back in 2023. These are all old setups that I'm just using for example. Not going to make you guys any money, not going to make me any money. So we're looking at new, but this is just an example of how just looking for a simple 50% pullback can often be what it takes to just find a good setup. We'll talk about NVIDIA here in a little bit, the short on that and why. But that's what I'm looking at on LRCX, and they had earnings this week. Some people have asked me on Discord, which, by the way, I don't make TradingView posts about these or post them to. I've been trying to be better about posting things to X, but I always talk about this on Discord. So join the links at the bottom. I don't charge for it. I'm never going to ask you for money. If anybody sends you a message or friends you with my icon, with my name, asking for money, that is not me. I don't need to take your money. I don't teach classes. I just come here once a week, talk about what I'm doing, and teach, answer questions, and hopefully get some ideas from you guys on some stuff to look at the next week. That's what I do. All right. So the other one, which was based upon a spike alert, which is another one of my favorite techniques, which is an indicator that I coded up for TradingView. It's not that fancy. It's just a false breakout. You see that a lot of stuff happens. Okay, there's a lot of false spikes. Because it basically represents price volatility. I really like to scan for these in the morning on the first 30-minute bar, and MMC was one that gave us this. That was back here in basically the beginning of the month, right here. Sure, Max. We'll look at that in just a second. Make sure you get your symbols in. We'll take a look in just a minute. I'll give you my opinion for sure. Maybe no opinion. One thing I've really set myself to this year is focusing on looking for setups, not trying to predict the future, so to speak, right? Because that's when you start getting into that criticism about how trading or technical analysis is astrology for men. Because look, we should know that we can't predict the future. One of the best books of trading is Trading in the Zone by, I think it was Mark Douglas, not Michael Douglas. That's an actor, I think. But it basically just every chapter is based around beating into your head. Anything can happen, and so it's not about losses and wins. It's about having a setup, having a confluence of setups, of events that happen that trigger you to take a trade. You log them, you find out if they work or not, you put that into a whole data set, and that will tell you if you have a working strategy. And the way that the stock market has gone and is going, what I focus on is being like a baseball player trying to get on base, trying to have a good on base percentage, get in a trade like this early, take a little bit of profit, and then ride it and see what happens. That's what all of them are based on, basically. And so this came up early in the year based on Monday, I think of the 6th. And I'm not going to take those in isolation, all because you see a lot of these spikes that happen. Like here's one, and then you have a bunch down here. But these are different. This time it's different. These are all just noise. When it happens at one of these 50% levels, and of course that 50% level started December 2023. This goes back many, many months, a year over, up to the all-time high here in November 2024. That 50% at 209.89. And notice how price comes here and fights it and then keeps above it. And this is on the daily chart, okay? And so that's what I want to see. It also comes at a volume profile level where volume profile, which by the way I call it a cheat code of trading. The point of control, the red line, is where most of the trading happened based upon volume. But I'm going to also make sure that I have a good little peak there. If you turn this on the side and you see how it makes little mountains, I want to see where there's a lot of trading that happened. And of course, this is based on historical. This is not taking into account any of this stuff right here. It's not taking into account any of this because that's worthless to us. That's already happened. And so basically the price chart for right around there looks something like this. Are you going to do it for me, Trading View? Yeah, okay, we have to go to a 4 hour sometimes. For some reason, it doesn't like that on the daily. But there we go. This is what we would see on that day there, where price is spiking down below it, and then by the end of the day, it closed above it. And what I like to do here is figure out a way to get at least a 3-to-1 risk-reward ratio and do another volume profile here. Where is that? That comes up like that. I like to look at price eras. We use the volume profile of the trend up to find the support, and then the target we're going to find from this whole consolidation era right here. Now, someone asked me on Discord about this trade. They said, hey, you got earnings coming up, which happened to be this week. It was on Thursday. And before that even happened, let me draw up the risk reward on this. So we're going to take it off that spike. Let's just go down to the spike. So we're going to take it off that spike. We're going to try to get it up to here. And then we're going to give ourselves a risk reward of about 3-to-1 up to that first level. Now, I want to go further, but that's where I want to take my first profit target. And they asked me as this thing was kind of banning around, people that were on my Discord asked a very good question, like, are you worried about earnings coming up? Because, yeah, earnings can have a big effect on a stock. I mean, that's what stocks move on, is basically earnings. But I told him I'm not that concerned about earnings as long as I have time before it for price to move in my direction, get myself to a comfortable, profitable place. Like if it was break even, if it was at a loss going into earnings, there's a good chance I might cut it because I don't want to take that risk. But the idea is to get yourself some positive movement in the direction of the trade before this event happens. And let me tell you something. So many people got really obsessed, I think in 2020, when people started getting into zero DTE or weekly options of playing earnings as lottery tickets. Horrible, horrible idea. Foolish venture. Because that's when, once earnings happens, all the volatility collapses. The implied volatility collapses. There's no way that you're going to long-term make money on options. And I've seen just in my experience over a decade of trading stocks and options and such that the movement happens really that month before earnings. If you want to play options, play them a month before, because then as volatility rises into earnings, you actually offset theta if the trade starts going in your way, if you're familiar with option concepts. If you want to know more about that, query me. We'll go into it. But I got a lot of stocks to look at. So this played out, and then I don't know why this was, but we got to our target here on Monday of this week. Took profit. Now I don't care what happens with earnings. In fact, earnings created a little bit more volatility. But this was a great example I got to talk to people on my Discord, as they were asking the question, Simple G, great question asker. He's going to do really well in trading because he asks lots of questions. When I started, I asked a lot of questions too. I've already taken profit, about half, a little more than half off of this position. And now I'm just going to let it sit and see if over the course of the next couple weeks and months, this thing can recover. If it stops out, I've already made profit. Not worried about it at this point. And so that's where I want to be with my trading. I want to take a small position, actually, yeah, a small relative to account, and then get it in profit, take a little bit off, and then let the rest ride and hold that as a stock. Because I don't know if you've noticed, but stocks do tend to go up more often than not. And I mean, that's one of the I'm teasing about Nvidia here in a second, but I've owned Nvidia since well before 2020, and I bought more in 2020. And so, really, you find yourself in a good point owning stocks. I so recommend to people to own stocks instead of playing options, because I just don't see that many people succeeding with options. Whereas if they took the money they were about to spend on an option, trying to hit it big, and just left it alone in a stock and came back a few years later, they're objectively going to have more money. I'm comfortable saying that as a blanket statement because of the people that I talk to on a regular basis. If you're better than that, then you've got a system that works for you. But if you're just starting out, try owning stocks. Now, I did make a post about NUE, moving on. And so this is a multifaceted trade, but it's all based around the same concepts. Earlier this week, I got a spike alert on Tuesday. It was on earnings. I love having these price spikes on earnings where you have some kind of earnings-based volatility that spikes down to a low. This one worked very well because even on the trading time frame, I'm looking at the 30-minute right here, it was at a shorter term 50% retracement level of this trend from Friday, January the 3rd to January the 17th. So it spiked and held that support on this lower time frame, this trading time frame, the 30-minute. And it also, let's see, I think it also had a volume profile, if I'm recalling correctly. Yeah, so the spike even held the point of control. Look at that. It spiked and held both the 50% and the point of control. You can even see where price is respecting it before in the day or two before as well. And poof, launches it. It's great. That in conjunction with the fact, this is why this is one of my higher confidence trades going into it. I made a post about it. It also, on a fractal level, matches up with the low from COVID, the COVID low, all the way up to April of 2024. 50% of that level, and also barely spiked down to the volume profile of this going up. Anything can happen, but this is one of those where so much comes together that I couldn't live with myself if I didn't take it. Now, Nucor is not a tech stock. It's not an AI stock. It is not a crypto stock. It is not all the stuff that people are talking about on Twitter. It is a materials company. They make steel. Yawn. Big yawn. Is this thing going to go up 600%? Is it going to go up, 1,000%? Probably not. But it has a nice price history going back to the 1970s, and it's highly cyclical based on economics. It's a little bit bullish. In other words, whenever we had, the early 90s, then the 90s recession, and then the 2000s up to 2008, and then a recession, and then in 2020 onward up to here, it has a cyclical pattern of many years, and that has to do with what the economy is doing. What are industries doing? Are people going to be buying materials? Are people going to be building stuff? If you want to be optimistic about the American economy, I think that buying the materials that are going to build it could be it. I don't care about that narrative. I'm just throwing that out there. I really care about the technicals. I really think it's a good setup. But I like this a lot better. I like this because nobody's talking about it. I like this because people aren't just throwing care to the wind about it. And so I like this going into the year. See, Hershey's. So Hershey's is brought up by multiple people on Discord that, I can't deny it. This is also if we go all the way out, as you can see, it's at a volume profile level for the trend upward from, again, COVID to the all-time high. A friend of mine, when I told them about Hershey's, they said, isn't RFK Jr., the supposed Trump Health and Human Services secretary, going to hurt their business? I don't know. I don't let politics get involved with my trading. I don't let that affect me at all. But the technical is sound. From the all-time high to the low all the way back in 2009, that is a pullback. That's like that Amazon pullback where you have this well-established company that comes back for like a once in a decade, multi-decade opportunity. Now, I'm not going to give it too much because if it breaks below it, then we enter into what I call the valley of risk. But there's a lot of stuff going here. And in fact, I had in last Friday, there was a spike of that level, and then even today, Friday later, there's a spike of that level. People tried to sell it off and brought it here. So I know where my risk is. If we start to break through this level, that's going to really enter into the value of risk. And that's what's important. I know when I'm wrong on this, but this is going to be a great bottom pick that I'm looking at going into this year. I think also the price of cocoa has finally started to affect, maybe that factors into it as well. This has been kind of like a meme stock. There's this cocoa was cash contracts, but these are the futures. If you go back and look, have been just on an absolute tear for the last year or something like that. But this isn't going to last. Farmers will plant more, I suppose. So whatever narrative you want to put around it, you can. But again, it's all about the technical for me. LHX, just as a caveat, this is sort of just a trade, but it is based upon seeing a spike on earnings on Thursday of this week. I say it's just a trade because this is not nearly like the. If you look at this, I'm following my rules that this is a 50% from the earnings of October 2023. Yeah, well, no, that was there. Basically the low of October 2023 up to the high of November of 2024. Also at a volume profile level of this trend right here. Blah. That's a bunch of junk. This is the kind of stuff when people ask me to look at something and it's just this stuff right here, I don't have an opinion because I don't see a setup. But in this little realm here, the last 2 years, I do see a potential edge here. And of course, there's the spike on earnings, which by the way, spikes on catalysts, really like them. And so far, doing pretty well on LHX. So that's some of the trades from there. And so yeah, that's the thing to talk about. And the rest of the stuff, these are stuff that I've owned. I'm not getting rid of anything. Actually, I take that back. Yeah. By the way, so if you guys have questions, pop them in the chat and let me know. Let me check real quick. I want to check that Twitter stream or X stream or whatever. It didn't even start. There are no... Yeah. Okay. Trying to get some other point. All right. So this is a little bit of a contrarian. It is a contrarian play. It's when we had this dip here on Monday of this week, big old dip. On Tuesday of this week, I decided to get a little cute and take a options-based short on NVIDIA. Options-based because I don't want to short the shares. I still own shares of NVIDIA going back all the way to 2020. So my buying price for NVIDIA is way down here in the split adjusted territory of, like, let's just be generous, in late 2020. I don't remember what it was, like 10. Okay. So I'm good, and I don't need to get rid of those shares. I think I'm pretty good. But everyone has been trying to jump into Nvidia for the last month or two. I mean, they really saw this Trump pump, uh, but what I see in here is I see these spikes that just can't break any higher. This double top, if you will. Okay, I'm not seeing it. There's just too many people that are too sure that this thing is going to make them incredibly wealthy at this point. I mean, it's a human. This why trading and investing is so hard, because people look at a chart like this and they want to jump in here, and they want this to happen to them from that point. They see it, they see it's up a bunch, they read it in the news. It's just not going to happen that way. It just doesn't. I mean, need we only go back and look at the EV stock era when everyone was buying it here in early 2021? It's just everyone was so sure. You know, everyone was so sure in the beginning of 2021 that EV was going to be the thing. Oil was going the way of the dinosaur, but ironically, or I don't even consider ironic, that's the opposite of what happened. Oil was the thing to buy. The thing that everyone's thought was crap, you should buy, and the thing that everyone says is just going to go to the moon and beyond, was not. And so that's what we're looking at. And people that really want to own NVIDIA, if they're really convinced, if you love their chips, if you think they are going to be the thing that makes or breaks AI in the near future, then let me give you a little trick for how to buy NVIDIA. I want you to go back to just a few years ago and measure from the high of November 2021 to the low, how much it pulled back, 68%. Then I want you to go back a little bit further. I want you to go back to 2018, the high down to the low, 57%. Then let's go back to 2008. High to the low, minus 85%. That's a bit extreme because 2008. The point is, at some point in the future, you will get at least a 50% to 60% discount on any tech stock that you look at. Guaranteed. Just think about it in those terms. Think about it as guaranteed. Yeah, you know, there's going to be caveats to it, but just think in those terms instead of I need to get in now. So what does a 50% pullback look like? Well, all-time high down 50% puts us at about 70K, or it's not K, but I'm thinking Bitcoin. 60% puts us at about 60. Anywhere from 80 to 60. Is what I did was I took a put out to January of 2026 for 80, sold a March dated put against it to buy it down a little bit, and then I took a March put to see if we can get a break of this level down to 116. And then actually today, when it was down a little bit, I hedged a little bit and sold a weekly against it to get my theta positive and make an extra $100. So where do we stop this day today? Well, it did stop at a very key level. This is holding it up. The 121.17 has been holding it up all week. It's basically the volume profile for this whole range. And yeah, that's where it's stalling out at. We're going to see what happens this week. There's been a couple of things I thought was kind of interesting that came across. Let me bring these up. So if you guys have been following the news, or if you haven't, I'll catch you up real quick. So there was basically the Chinese version of ChatGPT came out called DeepSeek. And it's been a little fishy how they were able to basically create a complete replica, not complete, well, a functional replica of ChatGPT in such a short amount of time for so cheap. And people started looking at the NVIDIA sales. Now, NVIDIA is banned from selling their AI chips, their best AI chips, to China directly. We've embargoed that because we don't want China getting this technology because we recognize it's powerful technology. But about the time that DeepSeek was founded and up until the last year and a half, the sales, the NVIDIA revenue from Singapore, very free little small nation, former British colony, has skyrocketed. And also 32% of NVIDIA's overall revenue has come from the two of them. And I think it's NVIDIA's produced more revenue and sales to Singapore than China. So people were starting to kind of figure out, okay, we see how they got that, how they got those chips to do this DeepSeek. And today, the CEO of NVIDIA got called to the White House to have a little chat with Trump about these things happening. So, not saying that that's going to necessarily make it go up or down. DeepSeek coming out was basically what tanked the whole thing. But it doesn't necessarily. I don't know. Who knows? We didn't know the news going into it. We don't know as it's going to play out. I'm just playing the longer term hype mean reversion on this right here. So we'll see what happens. So that's the short. MicroStrategy is the other short. And those are my trades. So let's look at UPS and Pepsi. If you got symbols to look at, we'll put them in. And I appreciate you guys being here, by the way. If you like all this, make sure you put a like on there so that other people can find it too. I do this to teach what I know, to help people out in their journey trading. I could have used somebody that gave me some free advice when I was starting out. So if you like it, let me know. And make sure you join Discord and come talk to me, and you can catch the trades live as I do them. So UPS is something that I have followed, and unfortunately, my friend Max, this has entered into what I call the valley of risk. And the valley of risk is where I generally, like I said earlier in the live stream, I want to try to buy stuff. And I remember this. This is going back to, 2022. I did buy UPS at this level. I bought UPS at 157.86 because that's the 50%. And as it came down and broke it, I took my loss here. I don't want to take losses. I want a stock to just go up. But this is why I do. Because when you break that level, when you break that 50%, when more than half of the price action is going to the downside, you enter into this valley of risk. Why do I call it this? It's a dark, dark valley that you get into as a bag holder. And you don't know what to do because now the level that you wanted to buy it at, the level that was holding it up, the level that looked very strong, is now not holding, and you really don't know where it's going to stop. But what ends up happening is if you do decide to sell it at this level right here, it's going to go back up. But if you hold it, if you hodl it, if you bag hold, it's going to do this. And you don't know when it's going to come out. And it's just best to avoid this situation entirely. Sorry if that's what you're in. If you're looking for a when to buy it, we'll look at that in just a second. But this is just kind of the cautionary tale to stocks. And this is what if you can just avoid this. I know that a lot of the wisdom is you just to buy a stock, the Warren Buffett stuff. You don't care about the price. You find a cheap company, you just hold on to it. But we don't do that, do we? Here, we're basing it on technicals. Unless you're an accountant, unless you can read these reports, it doesn't even matter. What do PE ratios matter anymore? It's all based on future projection and future speculation. That's what stocks are based on. Maybe one day in our lifetime they'll come back to some kind of reason, but this is how the market works now. And you have to trade based on price action. That's the only way you're going to get around it unless you're insider trading, and that's illegal. So that is the edge that I work upon. There's other people that have other edges. that like they know a specific industry. Maybe you work for UPS. I don't know. But where can this thing stop? Well, I'm going to look at this whole era right here, and I'm going to say, where's the volume profile of this era? It's not a good place. This thing could keep on falling all the way to 97.39 because you've already entered into this problem right here. So that there's no opportunity here. I would not buy this. It does seem like it's cheaper than it was, but it's not like Hershey's that I talked about, where I have some clear defining rules for why it should stop here. But UPS, just not seeing it right now. You just got to wait until it hits that level, and you might could play around a little bit. But sorry, no. Pepsi, I'm actually Coca-Cola is my thing. This is a good one, and I already have it marked up because someone's probably brought it up to me. I'm a Coke person. People ask me, why don't you just drink water? Because it's 0 caffeine, 0 sugar. I was like, water sucks. This is good. It's a little spiky, but this actually has some good bearing. I'm sure that maybe you asked this a little bit. I don't remember your name, Max, but this actually 149.15. I think we probably had this from previous live streams early into the year. This looks good. This is actually one where I pull out my little pad because someone in the chat has mentioned it to me, and I start looking on the radar for this because, as I noted earlier on when describing 50%, let's clean up, make it simple. Back in 2023, late 2023, this was Coca-Cola COVID low, which hasn't been as relevant. Well, I'm not going to say that because a lot of the stuff like the Hershey's, not the Hershey's, the LRCX, and the one other I was looking at, they are based on the COVID low to all-time high, 50%. But yeah, Coca-Cola, boring ass Coca-Cola, 51.74, 50% level. Great level. Not a great dividend because it's just sugar water, but great level to pick it up there. And so yeah, I mean, that's one to look at next week. Thank you very much. That's why I love doing this with you guys. What's up, Ben Graham? Yeah, let's look at them. I haven't seen those symbols before. If we see opportunities, NLPC, can you double check that symbol for me? That's not NPLC? No. Double check that symbol for me. HEIA. Heineken. It's a REIT. Let's see. Is that Heineken? I don't trade European stocks. I'm not against it. It's just that I've never taken the extra steps to go to my broker and try to get it set up so I can do that. Maybe I can. I've just never done it. But I like it, Ben. 62.52. Nice little 50% level there. Don't think you're going to have a volume profile around that era that's going to really support it, do we? No, it's down here. But how I would structure this up is get really interested. Look for some kind of price action setup here, some kind of structure, maybe your favorite indicator. When it hits 62.52, set yourself an alert at 62.52 and get really, really interested in it. That's what I would say. It had earnings, looks like. No, it's got earnings coming up. Ooh, see if you can't get that on earnings. That'd be nice. That would be really nice. A cannabis REIT. My general thoughts on cannabis, and again, guys, I've been doing this a long time. I mean, long time relatively, but I was there, not trading because I wasn't particularly into it, but I was there in 2018 when cannabis was the thing, before it was crypto, before it was EV, and I mean, how much money are people going to make off weed? I think people that bought a lot of weed in college, they may think that, what an ounce is hundreds of dollars or whatever. It is, but a lot of that stuff's being taxed. I just don't know how profitable these weed company is going to be, because they're not going to be allowed to be very profitable. This is me just throwing salt, throwing water on it, but maybe it'll be okay. But I just don't see that it's going to be that. I just don't see it. All right, so New Lake Capital Partners. I don't see a technical setup here, and I'm just not really that. I have a friend of mine that had a bad experience with actually two of these cannabis dispensaries. One of these, he did some private equity deals with them, and it did not go well for him. He tried to get me into it, and I was just kind of like, nah, man, I don't. I'd rather stick with what I know, which is trading technical setups on stocks and crypto and things like that, rather than get into some kind of private equity deal. Because, yeah, I mean, the problem with these, not with this REIT, but the problem with doing a private equity deal is you can't click a button and get out of it. If you want to get out of it, sometimes you got to involve lawyers, as my friend did. Too much stress. I wouldn't say it's creepy. It's just I'm not particularly interested. I'd rather look at things that I know. So, all right. Thanks for hanging out with me, guys. I appreciate you hanging out. I hope we got something from it. Make sure that you like and do all that algorithmic stuff, because I'm back. I'm back with a fierce vigor to go trade some futures and make some cash and see if we can deploy it into the market. Just as kind of a recap, one of the things I've talked about over the last couple of weeks as January played out. If you go back and watch my live stream from maybe the 1st of January, I talked about the January effect, which is as goes January, so goes the year. That's the kind of the principle of it. 68% of the time over the last 97 years that I looked at, did it myself, of the S&P 500, 68% of the time, the way that January closes, bullish or bearish, determines if the year will close that way as well. So in other words, we had a bullish January. It opened here, closed here. 68% chance we're going to have a bullish year. It's going to close higher than it started. That's not saying how much. It's just a Boolean, true or false, 68% chance. And there's room in there for it not to happen. And there are some concerns. I'm a little skeptical because, again, just like Bitcoin, a lot of things, I want to see there to be a lot of momentum on a breakout. This is SPY we're just looking at, but also on the futures, same thing. Let's see, QQQ, NASDAQ, probably hit even harder. Made an all-time high. Let's see, what was it in December? Still hasn't been able to. I want to see some oomph. I haven't deployed my tax-advantaged accounts yet. You know how they say time in the market is better than timing the market? I'm trying to time the market here. So if we get a confirmed breakout, I'll do it. But I'm just not going full in yet. I'm not all in yet, the market. We'll see. We'll see. I'm playing the stocks because if the market goes up, they will go up. And if the market goes down, they might give me some beta. That's how I like to do it. So we'll see. See you guys next week. Trade wisely.